I guess that's a microphone. Good morning, everybody. Happy Tuesday. It's Super Tuesday. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance to reduce our potential risk. Because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I've been a currency trader just over 20 years. Before that, I was a venture capitalist in the Silicon Valley. And before that, I worked at NASA. Also worked at tiny little companies like Apple Computers and Cisco Systems. You might have heard of them. Very cool. So I bring some of that with me. I also worked on a board of directors with George Soros. Yeah. I peaked at 20. Here I am. I'm still here. So, so I can share all that experience and try to help you find your own style of trading Forex. Ideally, you're conservative and disciplined. That's what I'm aiming for. So anyways, ask questions, get involved, let me know how I can help. Today I recommend we cover gold, oil, Bitcoin, dollar pairs, yen pairs, Swiss franc pairs, and I think exotic pairs. I think that's it. I think that's the entire world. But maybe I get to all that, maybe I don't. Really, I'll let you lead. So ask questions, get involved. In the description below the video, there are many links, and they're all good. One is a link to my book, Strategic and Tactical Forex Trading. Would you please leave a review? There's a link to FX Bootcamp, which will teach you, primarily technical analysis, but we do a lot of trader psychology stuff, macroeconomic stuff, monetary policy stuff. But the rest, besides that, is technical analysis. Great training videos. It's $88 a year. Check it out, man. There's a link to Quantbox. You can try it out for $8 for the first week. And we'll, in fact, use that tool later today. And that does quantitative analysis of macroeconomic data and then compares all that data to spit out, not trading ideas, but trading logic. That's $8 for a trial. Think you're going to like it. Okay. Cool. So, for example, we used it yesterday to look at a Euro-Kiwi trade. And Euro's strong today and Kiwi's weak today. That's perfect. There's also a link to tradersway.com, an amazing foreign exchange broker. Yes, they're fast. Yes, they're affordable. Yes, they pay huge swaps. But they also have above average good-looking people. And if that doesn't impress you. So anyways, look, honestly, they earned my loyalty and respect many years ago. I think it was about 8 years ago. The Swiss National Bank literally lied to the world. And the world was positioned based on what they were told by the Swiss National Bank. And then literally 72 hours later, the Swiss bank did the exact opposite that they said was the central point of their policy. They did the exact opposite. And look, it devastated the foreign exchange market. It really did. And huge brokers went out of business that day. Huge, like the biggest of the brokers went out of business that day because they were holding the opposite side of those positions. And they were devastated to the point of going out of business overnight. Like literally think about it. The biggest retail foreign exchange brokers in the world, not just little ones, not little regional ones, the biggest ones in the world went out of business. That's how shocking this was. Not just one, two. Trader's Way was perfectly, totally fine. When I contacted them, I'm like, what's up? What's up? What's going on? How are you doing? They're like, we're an ECN. We've executed all the trades. We're not on the other side of these trades. We're perfectly fine as a broker. We're still executing. We're not holding the opposite. We're not holding the other side of the trades. We're perfectly fine. And I'm like, oh my God. I'm like, you need to send out a press release. And they did. And right then and there, based on their behavior, that was enough evidence for me. They earned my loyalty and respect. Makes you wonder what the other brokers were doing. So anyways, Trader's Way is a boutique foreign exchange brokerage firm that would like to earn your loyalty and respect as well. So if you go to tradersway.com and open up a demo account, maybe they do. Maybe they do earn your loyalty and respect. Give them an opportunity, huh? Okay, family says, good morning, kindly. Can your knowledge on euro-dollar rate increase? Okay. Yeah, no, I don't have my Harvard mug. This one's just a global map. I like that Harvard mug, though. They're hard to find. That one's a big, heavy one. So, look, family time, euro is not a reserve currency. So typically, if they're raising interest rates, it would bring euro strength. That's part of why we've already analyzed the euro dollar should go up. We did that yesterday. We did that last week. I did that 2 weeks ago before I went on holidays. I did that in my quarterly outlook. Yeah. So anyways, so nothing's changed, family time. Yeah. Since about the beginning of April. Even before that. Impact on DAX? Well, that depends. So, like, for example, let's answer that differently. Let's answer that. Oh, what? Oh, maybe I'm not logged in. Boo, boo, boo. See, notice that this is not a web page. Okay. See, it's doing the calculations. Isn't that cool? It's not a web page. We're logging into the Google Cloud. Pulling information, doing calculations. All right. So what were we talking about? Oh, DAX. How about we go to global stock indices and we go to the DAX. Okay. So it should go up moderately. There's a bullish trend and seasonality says it's all good. Okay. And institutional investors are not going to like slow this down. Okay. So for right now, it seems fine. Right? Now, check this out. Isn't this funny? 81% of retail traders are short the DAX. So Quantbox says, buy it. What a mean machine. Huh? What a mean machine. Retail traders are short. So the AI says, well, if retail short, go long. I just love it. So here's your projection by next week. Okay, we should be about 16. Okay. Okay, so now we can take a look and go to the DAX. Yeah. Okay. And so it's saying here, like if, so basically it's doing a projection. So let's just project from this time frame. We should tippy toe, best case, base case, worst case scenario. If this continues to the upside, then we're looking at, heading up to 16. I would take that even further because it's only projecting 7 days. I would project me personally as a tactician. I would say 16 and a half is very realistic. Because I'm projecting farther out than 7 days. Okay, so the only challenge we have to get through this. So how would we know? Well, we might want to look at where to go? Where to go? Where she be? Oh, there she be. You can say, so we're in April. Okay. April to May, okay, March to April, and April to May, over the last 20 years and over the last 5 years have been up. Up, baby, up. We're in a 60-day period of up. Well, wouldn't you have liked to have known this way down here and down here? Okay, and now we're here. Okay, what do you think, guys? Would you have liked to have known that the DAX in this period tends to go up for 60 days? Would that have positively impacted your analysis? Okay, you might have said, well, Wayne, this would have been impossible to predict. Oh, I agree, but this would have been easily predictable if you were already a bull, based on your quantitative analysis of what DAX tends to do in this time of year. So then what you do is you employ your technical analysis, and when the trend turns bullish, you start a buy-in. Okay, you start the buy-in. That's pretty, right? Okay, and that's why Quantbox looks at technical analysis, not just macroeconomic data, fundamental analysis of economic data. It does more than that. It actually looks at the technicals. So at some point, this turned trend reading, this turned bullish. Okay. Yeah, I heard that, Richard. Anyways, you see what I mean? So there's my thoughts on DAX. Was that helpful, family time? to know what typically happens over the last 20 years and over the last 5 years? It seems we're about 60% through a probable move. Now, remember, there's only probabilities. We don't know the future per se, but we do know the past. The past does not predict the future, but it helps you calculate possibilities or probabilities. AKA, it's just math, yo. If you take this to the bottom of that move, then that's where we are right now. By the way, I just noticed this from this old discussion that we had. Look at this, where I measured the top of the range to the bottom of the range, and then I projected if there was a breakout, we'd go from the bottom of the range to here. And when we finally broke out, that's not bad, right? Like, that's pretty good. Based on what happened in early February, it was pretty reasonable to predict a low for middle of March, right? That's projection a month in advance. Cool. Right on, family time. I invite everybody to try Quantbox, the retail version. There's a trial, less than $8 for a week. It's not very expensive monthly as well. Anywho, let's take a look at what we discussed yesterday. And now I got to go into a smaller time frame. Okay. And this one we discussed as an up trade. I either did it here or I did it in the day trading group. I actually honestly don't remember. My life is a blur. But I do know up was the topic of discussion. The rest is just technical analysis, right? Zip in here. And notice all we did was ride the 21. You just had to be looking for it in advance. Well, how the heck would you be able to do that? Well, we could do... Okay. And it's one of the best buys out here. Buy Euro Kiwi. It's one of the best buys. So you look out here and you're like, oh, I should be a buyer. And you buy off the 21, you're long and gone. See, that's just technical analysis, but now you got fundamental analysis behind you, with you. You're trading with the fundamentals now, not against or not randomly. Oops. Okay. I'm going to check something. Hang on a second. There's a man waiting in the sky. He'd like to come to meet us, but he'd think he'd blow our minds. All right, so this turned bullish March 21. Is that right? Yeah, it looks like it. Is that March 21? March 21. March 21, we have to go back a little bit. All the way back to this, I guess, the full left side here. Okay. On the 21st, right here. Unfortunately, I have to give it one more click, and often that makes it hard to see, but one more click. Okay. So this move that started in this period, so I suppose a breach in here, Quantbox said, get ready. Now's the time to think about being a bull again on this currency pair, on that day. All right. So notice how technical analysis takes over. You buy dips. You buy dips. And then there's a breakout. So you can combine a lot of things where you can see we're in a range. So you can buy at the bottom of the range because there's only two things a bull can do. If this is where it turns bullish, or maybe it was even a little higher, it's hard to see. Maybe it was way up here. Okay? You don't buy high. That's just based on economics. Economically, it's more bullish than it was before. But now what? Well, you can buy its support. Okay? So you can say like a bottom in an uptrend. That's why you have to wait, for example, for some declaration of uptrend or a roll reversal. Do you know that there's only two things you could possibly do as a bull? It's one or the other. So, okay, I'm trying to get this to say somewhere in here there's a bottom, and then somewhere up here there's a roll reversal. Now, this is actually a little bit tricky of a trade because, let me get rid of this, because at the time it was an uptrend. Maybe you could argue this was a higher high, and maybe that's what put Quantbox bullish. So you would have bought this dip if you were a bull. And you might say it didn't work. Well, it worked for a week. And then came down, reset. The moving averages are no longer helping. But then there's a new breakout. And there's your pullback roll reversal, which was yesterday's analysis. And now we're long and strong. So there's kind of like the actual, I would say, good entries were trading in that zone or trading in that zone, the first one. And the first one may not have worked out well, but it worked out. It did not work out. Okay, that's okay. And so now we have continuation. Okay. Yeah, Richard says he was in that pair, but he had a hard time. Well, I'm showing, I'll give you a sneak peek of a tool that will be released soon. And you can see, oops. This is when Quantbox said become a bull. And it rallied, but then it came down, 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 then a lower high, then a down, then a lower high, then a lower low, then a down. And you're saying it's hard to hold there. But Quantbox is saying buy it. Buy it, buy it, buy it, buy it, buy it, buy it. Economically speaking, right? Notice that during this downward period, it actually gave you bigger and bigger, stronger and stronger conviction to get long fundamentally. Okay, fundamentally. The technical, which is this down part, is only part of the analysis, but eventually it looks like it has been proven correct. Okay. So these are the recommendations: 5, 5, 5, 5, 6, 6, 6, 5, 6, 6, 6, 6, 5, 4, 4, 2, 2, 2, 2, 2, 2, 1, 1, 1, 1. See how it got more and more conviction? Okay. So anyways, we're looking at here. High, low, 50-day average, 200-day average. Cool, right? So another reason to be a pro subscriber to Quantbox. By the way, how much more is the pro subscription? You get all those extra tools, all the extra pairs. You get right? You get way more in the professional subscription. How much more is it? It's actually $150 cheaper per year. Yeah, it's weird, huh? I'm a weirdo. 'Cause I'm a creep. I'm a weirdo. What the hell am I doing here? I don't belong. Look at that, boys. Huh? Smells like Teen Spirit. Cool. Let's see. Okay. See that? This is previous plans. Now that it's moving up is irrelevant. So anyways, Coolio. So Euro Aussie's performing okay. Once again, just kicking off the moving averages. See, Richard and Jim are talking about like it's so hard to buy these corrections, if you want to call them that. And that's where like multiple time frames, like really spending most of the time on the daily or the 4 hour to me is most advantageous. But also if you're following the fundamentals, you might be ready where you're like, okay, this is a higher high. So now my job as a fundamental bull, my job as a fundamental bull after a higher high is to buy a higher low. So what's the position trade here? Okay, buy somewhere between the central pivot and the M2. That's just in the training course. Every boot camper on the planet knows that one. Okay? But it sure helps to have the fundamentals behind you, huh? Okay. What's happening with Bitcoin? Well, in my quarterly outlook, I suggested Bitcoin would be up. Okay. So let's go. We'll look at this one, for this version. Okay. Yep. Okay. Yep. Yeah. So what's happening to Bitcoin? It's supposed to be going up based on the last Fed meeting. And once again, probably a big chunk of traders that trade Bitcoin have no idea that this has a lot to do with the summary of economic projections. They're not following monetary policy. So some people might have been blindsided by this, but it's the same rationale for gold going up. I find it hard. It's hard to find the will, whatever, never mind. Is it a trap? What do you mean a trap? No, it's just... All right, let me say it again. This has to do with the summary of economic projections. And as I described in my 3-hour special event and in my hour and a half quarterly outlook, this is what's supposed to happen, Bradley. Trap? What do you mean a trap? No, it's just fundamental. The same way with gold. Gold is supposed to go up based on the fundamental economic conditions this country is in right now. That's what's supposed to happen. So that's where it's helpful to have that base so that then you can build upon that, right? Okay. Yep, Bumpy. I was out of the country all last week as well, or not all last week, but a week ago-ish, 10 days ago. Find it hard, it's hard to find the will, whatever, never mind. Okay. Looks vulnerable to me. All I'm measuring here is the gap. Okay? Because one potential strategy here is the gap fills and then we continue. Yeah. Oh, I had a great time. Too many people in Italy, though. There's just too many tourists. This world, there's too many people on the planet. Really sucks. But there's some really beautiful things. Rome is amazing, but it's too big. Florence is okay. I prefer the Tuscan countryside. Man, we had a good time in Tuscany. But I like Venice because Venice was so small. There's no cars. There's no bikes. Right? That kind of stuff. There's no electric scooters. But there's still too many people. But I thought if you stayed there for, let's say, 4 months, and you're like, I'm going to live in Venice for 4 months, and I'm going to write a book, I think it would be excellent. Right? I think that would be fun. If you had an outdoor patio, and there's some pretty nice places that have outdoor patios, and a view of the water, or you can hear the water, right? Now you need to see some sort of water, but some quiet, which is difficult. So you don't want to be on the Grand Canal, but you want to be on one of the smaller canals. with a little rooftop deck and, a nice little view, and maybe some local restaurants and a local grocery store nearby, so you can just sit up there and have your coffee and your cigar and write, and then take a break and, go walk, and then take your laptop and sit in a square somewhere and sit and write. Also like seafood, so the seafood in Venice was great. My favorite is the cuttlefish ink or squid ink. Oh yeah, and the gelato's nuts. It's insane. But yeah, too many people. But I think you could do it, is what I felt like. Okay, you could carve out a place in Venice that's still pretty cool. And deal, right? Deal with the crowds. But the other place, it's too many. Yeah. Yeah, that's true, Milos. I enjoyed the Medici and it's funny, like, there's information, but there isn't information. You kind of have to already know. Also, I probably would have needed more time to like go through the Petty Palace. Like, you'd have to seek it. And it's not something you do with your wife and kids. You do that with by yourself or with another economist that would even care, right? That kind of stuff. So yeah, and see the Duomo, and I'm telling my kids, it took a couple of 100 years to build the dome, just the dome. On top of that, church, and it was all financed by the Medici. How did they make all their money? Well, since the time of Jesus, usury was illegal. But the Medici, 1,000 years later, found a way to do it. And they convinced the popes to invest into their bank so that they could profit from usury. And all of a sudden, the popes changed the rules and are like, yeah, you can charge interest on a loan. Why? You were probably borrowing money from the pope. Oh, it's so sweet. I love that kind of history where it's bad unless the pope's making money, then it's okay. Yeah. So anyways, yeah, you'd have to, So that's not what the point of the trip was. Right. It was just to have fun with my family. So like in Rome, we rented electric bikes, e-bikes, and rode them through the streets of Rome at night. We went all the way to the Vatican and zooming around the Vatican City at night. And then we went all the way down to Trevi Fountain and the Pantheon, and, we went out to the Colosseum, all on e-bikes at night. Oh my God, it was so fun. We were racing down this big hill for about, 2-3 miles down this big hill. We're racing at full blast on the e-bikes. I mean, we're just having a ball. Yeah, it was pretty cool. Anyhow. Oh yeah, I wanted to do some Swissies. Oh wow, Thiago, that's amazing. That's a long way. Amalfi all the way. Like, come on, wow. Did you go through Central Europe, or did you just follow the coast? I don't even know if you can do that. Yeah, 21 days, yeah. A Vespa around Rome. Yeah, see, Rome is just too big of a city, really. I rented a vintage car, convertible, and we drove through Tuscany. And it's just tiny little streets and tiny little villages and tiny little roads. In some cases, you can't get two cars down the road at the same time. So I would recommend, because there were some Vespas in front of us, and people were riding on these Vespas. Through the Tuscan countryside. Yeah, I would recommend that. Through Rome, no. That wouldn't be my recommendation. But anyways. All right, so anyways, Kiwi, Swissy now making a new lower low. Okay, all we're doing, notice here, we're just riding the moving averages, which is what you're supposed to be doing. This is what I teach you to do. You're supposed to be following the moving averages. Any plans to add natural gas to Quantbox? No, but I do want to develop an energy page. It'll be related to oil, and including, I want to pull in EIA and OPEC data. I want to pull in rig counts, a bunch of things, right? Anything specifically towards nat gas? Yeah, I could pull it from the EIA. I noticed in the data set that I can do stuff like that. Nat gas inventory levels and demand levels and stuff. Yeah, to some degree, but probably not focused, but inclusive of it, right? Greg, you're out of here, man. So anyway, so Kiwi Swissy is one, and then Aussie Swissy is the other one. Okay. Zoom in here. Okay. And it's just another, right, sort of role reversal idea. You can measure this one, or you can measure this one, whatever. Yeah, I'm going to work on the energy page, but before I do that, because I have to organize and prioritize things, a Fed page would be, I think, even a higher priority. A Fed page. So anyways, so as strong as Swissy is across the board, Euro's doing better. So now I'll go back to these charts and we'll end the day here. Okay. Okay. Plan A, and this is Plan B. You're like, Wayne, that's not fair. It already happened. You're doing hindsight. Okay, okay. I'm not arguing with that. But if you've taken the swing trading course at FX Bootcamp, you already know this is Plan A, and this is Plan B. And from a bullish point of view, there is no other plan. So you have to shape your mind around that first. There's only two possibilities, unless you're counter trending, and that's not that great. So there's Plan A and Plan B. And Plan A didn't work yesterday, but remember, many of the markets were closed. Then you get down to the Plan B price, and now the rest is just whether you pulled the trigger or not. Okay? And now somewhere into there is the target, right? Bumpy says, what would you plot in there? Well, how about things like the summary of economic projections? What about Fed Watch tool? I don't know. I think if we spend some time, we can come up with some ideas. The thing is, you have to have the data. So where do we pull the data? How much does it cost? What format is the data? And then, and then from there, you have to be able to, I guess, integrate the data into Quantbox. And then from that, Data Studio, which is the Google Cloud, needs to be able to display it somehow. Because you just don't want to look at a spreadsheet or an XML file, right? So we have to visualize. We have to have the data, pay for the data, import the data, organize the data, and integrate all of that into Quantbox. And then Quantbox needs to be able to then display the data so that it's meaningful and useful and easy to understand. Well, let's just say there's a little, there's some thought that needs to go into it. You sure know what I'm talking about? So anywho, I gotta go. Please have a wonderful day. Thank you for being part of the Forex.Today YouTube community. Please click the like button on the way out to tell YouTube this was reasonably quality content and not a total waste of your time. It's Tuesday in the world, so today is a busy day for FX boot campers because we have a stop, look, and correct session at 2, and then we have a day trading group at 4. Oh my God. So maybe become a member of fxbootcamp.com, and of course, go check out tradersway.com. Cheers. Hey, that just happened.